Hi everyone, welcome to this week's edition of the Money Talk NGS Weekly Heatmap Review. If you're watching us for the first time, hit the subscribe button. If you're a returning watcher and you've not subscribed yet, please do subscribe. We drop this breakdown every week. This week, I'm switching things up. We're going straight into the heatmap first, looking at the performance sector by sector so you see the market picture for yourself. Then I go deep on the biggest movers and what drove them. And then we finish with the macro context from the MPC meeting. Let me know in the comment section which of these formats you prefer. But before we go into the heatmap, quick numbers first. The all-share index closed at 247,357 points, which is a 1.6% gain for the week, with the market cap hitting 159.59 trillion naira. For the week, we had 57 gainers, 38 losers, and 51 companies staying flat. Now, let's go into the heatmap. So for the financial services sector, we can see a very mixed picture here. For the week, we had 20 gainers, 16 losers, and 6 companies staying flat for the week. The financial services alone accounted for 77.18% of the total market volume traded for the week, which is 3.42 billion shares worth 207.61 billion naira. FIRSTHOLDCO, Access Holdings, and GTCO alone made up for the 8.51% of the total equity volume and 55.79% of the total value for the week. The story this week in financial services is almost entirely in one name, which is FIRSTHOLDCO. It's the dominant green block on the map, and I will explain exactly what drove that 25.59% increase in the mover section. I want you to see where it sits relative to the rest of the sector first. Access Holdings is also notable here, up 16.8%. Access dominated trading volume on Friday with over 198 million shares exchanged in a single session. AXA Mastered Insurance is also up 17.86%, the biggest gainer in this sector. We see this as a sector rotation into insurance name ahead of the Q2 results. On the red side, we have Royal Exchange down 12.84%. We also have Sunu down 10%, Lasaco Assurance down 9%. The insurance sector is splitting. Some names are being bid up while others are being sold. This is typical of the positioning before earnings season. Linkage Assurance listed 12.32 billion new shares on Thursday, July 23rd, as part of the right issue for which has 2 new shares for every 3 held at 1 naira 32 kobo per share. Their total issued share increased from 18.48 billion to 30.8 billion shares. Now let's move to the consumer goods sector. To have a better view of this, I'll be changing the look to only movers and then changing it to equal weight so you see what it looks like better. For the consumer goods sector for the week, it's a dramatic story. On Wednesday, July 22nd, Unilever Nigeria and Cadbury Nigeria both hit their 10 days upper circuit breaker limit, while Boa Foods and Nestle Nigeria hit their 10% daily lower circuit breaker. The maximum gain and maximum loss for same sector stocks on the same day is not a coincidence. That's large-scale institutional rebalancing. So we see money rotating out of the heavyweight consumer staple into the mid-cap names, and we believe they are expecting them to show better Q2 earnings. Unilever finished the week up 19.31%, while Cadbury was up 18.42%. Guinness was also up 11%, and we also have some notable recovery from stocks that have had a rough few months. For Boa Foods, that is down 10%. We can see this is probably linked to their Q1 results that shows an 11% revenue decline driven by weak sugar and flour volume. Nestle is also down 10%, as we said. If you look at McNichols, this name came in at with a decline of 5.47%. They've been on our extreme list multiple times in the past few weeks, and it's down again this week after last week's gain. The consumer goods sector overall is broadly green for the week, with 11 gainers against only 3 losers. But those two limit down names like Boa Foods and Nestle are heavy market cap names that matter for the overall market picture. Now let's move to the industrial goods sector, and we can see that this is a counterintuitive sector this week with Raw Cement, the same stock that fell 18.99% last week, gaining 17.56% for the week. That's a back-to-back week of near 20% move in opposite direction. Last week, we also spoke about them being driven by pressures from HBM Nigeria, which is up 4.33%. And the story hasn't changed. We believe that the expansion of their capacities would eventually affect the pricing power for the cement sector, but that is also related to the demand that might come in. So in the nearest future, you'll see how this impacts the market as a whole. We can see Dangote Cement is also down slightly by 1.24%. We have the Initiative PLC up 6.7%, and we have Cortex down by 6.9%. On the ICT sector, we can see this is entirely green for the week. We have 5 gainers with no losers, and we can see we have 4 companies that were flat for the week. Airtel has been on our list for a couple of weeks, but for this week it was flat. And we move back to those who moved for the week. You can see Omatech Ventures leading with 9.41%, Chams Holding following with 7.14%, CWG at 5.58% gain. These are smaller ICT names recovering after recent weakness. You can see MTN Nigeria and Airtel Africa were both flat for the week. No major moves after Airtel's strong run in recent week. Now to the oil and gas sector. We can also see that this is a mixed picture. They were mostly flat for the week, with 4 out of 7 stocks not moving. But we can see some of them, Eternal up 5.9%, Oando up after previous fall by 2.56%, and only Japan Gold marginally down by 1.69%. The likes of Seplat and Aradel that rallied in the previous weeks didn't move this week, and we can see that investors are probably repricing the Q1 results and some of the stock announcements into the right level for the week. So the next sector is the services sector, and you can see this is mixed. We have 8 gainers, 6 losers, 5 companies flat for the week. We have C&I leasing up 14.41%. We can see that this is counterintuitive, given that the NPL rate stayed at 26.5%, and this would impact their margin, but we'll look at them more when we speak about the movers. We have Ikeja Hotel up 10.59%. We mentioned a few weeks back that there was news about an acquisition in this space. The story appears to be driving continued interest. We have Keverton Offshore up 6%. That's the logistic and aviation support name recovering. On the losing side, we have ABC Transport down 9.6%. We have Transcorp Nationwide Express down 9.03%. Academic Press down 5.47%. They had a good run in the last 2 weeks, and we can see this as some persons taking profit after a good run. Now let's look at the construction and real estate. We can see that we have a standard name here. That's UPDC REIT. The UPDC Real Estate Investment Trust was up 33.33% for the week. That was our biggest gainer for the entire week, and it hit an all-time high of 14.05 naira for the week. We also have UPDC PLC itself gaining 3.9%. So both the REIT and its parent company are up. We have the Aden McCall down 9.86%. This is a small construction name with no specific announcement during the week. The next sector is the healthcare sector. The healthcare sector is a sector I would like to call our attention to for this week, specifically Mercure Industries down 26.97%. As we all know, Mercure is a pharmaceutical company that recently proposed expanding its capital raise from 30 billion to 50 billion naira. Their 2025 financial results were actually strong, with the revenue up 69%. The profit after tax was up. So this isn't a struggling company based on those numbers, but existing shareholders are looking at the massive increase in the share outstanding, and they don't like that dilution. We'll explain the full mechanics in the movers section. We also have Nimet International up slightly by 2.22%. That's a small positive move, with the reverse of FITSIN down 2.68% for the week. Then we have the agriculture sector, which is mixed. We have Zichis up 6.44%, recovering some of the previous week's losses. We have livestock feeds up 3.47%. Presco is down 10%, and this was in just one day. We also have Ella Lakes down 1.67%. Okomo oil remained flat for the week. The next sector is the conglomerate, and we are starting with Custodian up 13.7% for the week. They are an insurance holding company benefiting from the same sector rotation we discussed in the financial services sector. We also have Transcorp down 8.4%. This name has presently been on the losing side since it was removed from the NGX 30 index in July rebalancing. UACN is also down 7.77%. Now to the utilities sector, we have Giregu Power flat and Transcorp Power down 0.61%. Essentially nothing changed here. For the natural resources, we can see Thomas Wyatt is up again 17.48%. This stock has been on our movers list every week since its trading suspension was lifted early July. Also worth noting is that Aluminium Extrusion PLC, with the ticker symbol ALEX, was suspended from trading on Wednesday, July 22nd, for failing to file its 2025 audited financial statement. This is the exact same filing default that kept Thomas Wyatt suspended until July 6th, and buyers have consistently shown up in Thomas Wyatt since the trading resumed. The last sector here is the investment sector, and we have VFD Group down marginally by 0.47%. Now let's look at what happened during the week. We remember last week we spoke about the inflation rate staying at 15.91%. But this week, the MPC met on July 20th and 21st, reviewed the data, and decided not to move the CRR, that's the cash reserve ratio for commercial bank, stayed at 45%. The MPR was also held at 26.5% for the sixth consecutive time. The market interpreted this as a green light to buy, and you can see that in the week, the market moved after the MPC results. But to be honest, Governor Cardoso didn't hold because inflation is beating. The headline inflation only fell marginally by 0.02%. That's from 15.93% to 15.91% in June. That's barely statistical noise. He held because raising rates further would further compress the commercial lending in the already squeezed real economy, while cutting rates will put Naira under pressure. This is a tightrope for the CBN, And the nuance with the headline inflation, which we might have missed, is the food inflation, which I also spoke about last week. That rose to 17.52% from 16.96%. For an average Nigerian, even if you talk about GDP growing, inflation reducing, their pockets are not in better position because the price continues to increase by these percentages on a month-on-month basis. The question now is, what does this mean for the equity market? For short term, the hold is supportive as investors believe that there is no further tightening in the near future. This position was shown in the market and will probably impact the trading for this week. We also see investors looking forward to the half-year earnings. This will impact how they read this number and how the markets move. For the real economy, lending rates remain elevated because the NPR stays the same. Businesses that borrow funds to manage their inventory, payroll, and operations will still have to pay high rates. That feeds into future earnings for the likes of the industrial and consumer goods sector. This is Q2 earnings season and the final real test of whether the pressure is showing up in the company would be in their results. The CBN also named a specific external risk, which is what we are all aware of, the Middle East geopolitical tension and their impact on the global energy price. This is a primary threat to domestic inflation. Nigeria still imports some level of refined petroleum products, even though we have the Dangote refinery. If oil prices strike, both the Dangote refinery and the imported fuel would both rise in price, and Naira will face some pressures as we'll be importing inflation, and this could reverse some of the tightening that has been achieved in the last 6 months or so. If this happens, the MPC might have to hike rates before the end of Q4, and equity markets will have to reprice accordingly. One other thing that would make sense to call out before we move to the top gainers list was that during the week, the NGX Growth Index fell by 20.24% in a single day. While the main ASI gained 1.6%, the growth index, which track smaller and faster growing companies, was in a free fall. The divergence tells us that the rally is narrow and concentrated in large caps, financial, and select consumer names, not in the broad-based market. So now let's move on to the top gainers for the week. As I said earlier, we can see UPDC REIT up 33.3%, and this is their all-time high of 14.05 naira. I believe the reason investors are piling into the REIT while interest rates are at 20.5% is because they understand the structure of the market. The REITs are required to distribute a high percentage of their income as dividend. With the half-year dividend payouts approaching, investors are positioning now to capture those payments. In an high inflation environment, the real asset that pays regular income becomes a defensive store of value, and this is investors rotating into dividend yielding real assets. We once again have FIRSTHOLDCO on our gainers list, which is the fifth consecutive week of major moves in the stock. We believe the major driver for this is Femi Otedola, who increased his combined stake to 20.4% by the end of June, leading to an acquisition of about 1.2 billion shares in a single quarter. And we have the instinct that he has not stopped. When a billionaire like this invests in companies, many investors are convinced of their conviction and see it as a signal to also enter the market. So this could also be pushing the stock up. On our list also is Unilever up 19.31%. We spoke about them hitting their 10% daily circuit on Wednesday. This is defensive positioning ahead of the Q2 results. The logic is that Unilever has pricing power. They sell essential household products that consumers continue to buy even when the prices increase. The expectation is that Unilever has successfully passed its cost increase onto the consumer without collapsing demand. We'll be looking forward to the Q2 result to confirm this. And if that's the move, it is justified. If not, we would look forward to seeing a possible reversal in the name. We also have Cadbury Nigeria in the same sector, up 18.42%. And we see this at the same dynamic with Unilever. So nothing much to say there. We have the fifth stock here as AXA Mansard Insurance, up 17.86%. We spoke about the insurance sector rotation. They've been the laggard for the year. And in high interest rate environment, some insurance company will benefit from earning more on the float they owed, and that income would possibly be paid to investors, which is what they're anticipating. But let's see what happened this week to see if investors continue to look at the insurance sector. On the losers list, we have Make-Cure Industries, which I've spoken about briefly. We've spoken about their revenue being up 69%, their profit after tax up 177%. The company seems not to be in trouble, but the capital raise is probably impacting how shareholders value the company based on the eventual dilution of their shares when this happens. This is a case where good business performance and bad shareholder news coexist in the same week. The expansion on the long run is good for the company, but in the near term is not very good for share prices and earnings per share. The next company here is Royal Exchange, down 12.85%. For the week, there was no major corporate announcement, and we can see this is a technical reversal after recent gain with no fundamental catalyst driving it. We are watching for their Q2 results or any new corporate announcement. We also have Triple G on our list for the week, down 12.34%. Also no confirmed announcements. And this is a thin traded name that moves on lower volume and probably no story yet to say. We also have Boa Foods down 10%, same as Nestle down 10%. And both of them also hit their lower circuit breaker on Wednesday. In the same session, Unilever and Cadbury hit their upper limit. We can see from Boa Foods Q1 2026 results showing a decline in their revenue of 11%, driven by weak sugar and flour volumes. And their working capital appears to also be under pressure. Investors are rotating out of them ahead of Q2 earnings, which they anticipate might tell a story of further margin compression. As I said, they are a 15.2 trillion market cap company, and any movement in Boa Foods would impact the whole index. Same dynamics for Nestle, but we don't have their results yet. So we look forward to seeing their Q2 results to determine what could have led to this. So thank you everyone once again for listening to the end. If this has been helpful to you, kindly subscribe on YouTube and follow up on all our social media platforms. Hope to see you next week. Have a lovely week.